What's up, crew? Today we are going to look at what I like to call the VWAP open drive. Now this is a really fun trade to play on the daily open, gives a really quick trade, a really simple invalidation, and often is very, very effective. So yeah, we'll just have a look through the text here. We've got it set as a difficulty of intermediate because it's pretty fast paced. You've got to get in and out quite quickly. It's very reliable and it gives a pretty decent risk to reward. So the VWAP open drive is a great way to trade a strong move off the daily open. It is rare that markets move immediately in the desired direction. So what you are looking for is a low volume move up or down on open, followed by a quick flip of the VWAP and daily open. You then take the trade off the VWAP with the invalidation at the high or the low that was set previously of the day. Once set, you simply trail your stop loss up with VWAP and take profit when you see an increase in volume or an excess, which indicates that the drive has likely lost momentum. This is a highly effective trade to take and can give fast results, best traded on low time frames, below 5 minutes, or a tick or volume chart can also be used. So here is the example again. This is just the little diagram. So you're looking for the daily open. See the blue line here. You're looking for the quick move below and then above to take out the daily high and the daily open. And then you look to take your trade on the VWAP with your invalidation, in this case at the low. And this can be traded all the way up until you see nice increase in volume, an excess at the top here with the wick, and that can be a take profit level. But again, you can just be simply trailing your stop along with this to give the best results. So here is this trade on just on TradingView. So again, we can see this. We can zoom in a little bit here. I can't go any. Well, actually, this is on a 1 minute chart, so that's fine. So you can see here how the daily opened. You had that very quick move down on low volume before claiming the daily open, taking out the highs of the day, and then straight into VWAP. So this sets you up with this trade. Let me just zoom out a little bit. Sets you up with this trade off of the VWAP with your invalidation here. And at this point, you just let it ride. Okay, you just let it go until you see this increase in volume. And often what I like to do is look for like a high volume of the day. So if this is going to be an open drive, when this ends, you're going to see volume increasing, and then come to a climax. So in this case, we come all the way up to here. And you'll probably be taking your profit once you see that excess and that volume coming in, which indicates that that move, that open drive is likely finished. But the great thing about this is no need to close your trade, okay? So at this point, your stop loss is set here. So you're way in profit. There's absolutely no way you can lose like anything on this trade. And you even with your stop loss, it's like, yeah, way above your entry. So you can continue to trail your stop. And again, here you see, so the market just continues up higher. And then once again, we get this increase in volume. Not really an excess at the highs here, but again, like different time frames, this might show it. And then you start to get that move down. Still above VWAP. So you're still just letting this trade run, but like you're taking profit quickly. So if you do want to just get your profit, walk away and just allow the rest of the trade to go, then that's really simple. And you can see here like how at this point, finally, after about 7 hours, you would have got stopped out of this trade. Okay, and again, you can see there how it just zoom out. Once you get stopped, kind of just falls off a cliff a little bit there, and that's why I don't want to be holding it. So that's a really nice example of this trade on just a very quick, you would have been in and out of this within, yeah, an hour or two. So yeah, really nice trade to take on the daily open. Now we had another example of this. So today, 21st of July, we do have this example on our daily open here. So let me go to our daily open. And on this one, I'm just going to show you it on a tick chart. So quite often on the daily open, I like to look on the tick chart and I like to look at the kind of the delta profile and the bid ask and things like that. So we've got it on a tick chart here, and you can see we actually got two today, depending on which way you want to look at it. Okay, so you can see the daily open. I'd say initially we had more of like a move up, so we did kind of like chop around like for what about a few minutes. We got the move up, and then we saw this move down that took out the low of the day. So you would have had your daily open here, you take out the low of the day, you take out the VWAP, and then you get the short trade off of this. So you can trade that down until you see an increase in volume and an excess. And on this way, in this instance, it's more because we're on a tick chart, you're looking at a decreased time for this to be traded. So you're looking, much lower here than these are taking, 300 seconds, 200 seconds, and then you're down to 70 seconds with a really kind of strong volume coming in at these lows, comparatively so to where we were. So that gave you like one mini trade early on. But if you're thinking about this, this is a tick chart that's even more fast-paced than that 1 minute one sometimes. So then you can be looking at this as actually, okay, well, now this is flipped back, and then you take out the daily open again here, and you take out the VWAP, your daily open being here, you take that out, and then you have this other trade, which is even more reliable. So you're really low volume, then you flip it, take out the daily open and the VWAP, and then again here, you would set your, you'd take the trade here. At this point, this isn't one because you hadn't yet taken out the daily open. Okay, so that's important. Daily open would be, well, here it is. There's the marker. So you take out the daily open, you come back in. Okay, your invalidation on this second opportunity for this trade of the day would have been your low here coming in at 29,490. You take your trade here, and then once again, you're looking for this to trade up with an increase in volume and an excess at the highs. So you go all the way up here, and what do you get? You're seeing here, you're getting some, a few seconds here to get all of these trades in. 20 million volume compared to 1 million volume and stuff there. So again, a really nice opportunity to take profit as soon as you see that excess coming in, and you can take a profit on that. And then again, just allow your stop loss to go up with price. Again here, if you want to take profit more than once, again, you have a really high volume kind of area. So once again, an opportunity there to take profit, and you can continue this on. At this stage, you probably would not be wanting to look at the tick chart anymore because we're way away from VWAP. You start looking at kind of more standard timeframes and things there. But that's basically everything on this. I can show you this as well on the, let's have a look on today here as well. So here we are just again on TradingView, how you can see first of all, and this shows it maybe a little bit clearer. So first of all, we get the move up and then down, which gives a trade down, and you get a little bit of volume off of that. But again, you could have just trailed stop loss and then just been stopped out of that, and then that tells you, okay, then once daily open is claimed, you look to take the VWAP, and then you trade it up to where you get your volume spike, which would be just a very quick reactionary move up to here, and again allowing it to trail your stop loss, and right now very nice profit. So I hope you found that one useful. Do trade it. It's a very simple one to trade because obviously you've got to take it on the daily open, and you're just looking for this to resolve within an hour or two. But give it a go, and let me know what you think. Cheers guys, bye.